Welcome to Punch Card Investing, a weekly show dedicated to all things value investing. Whether it be analyzing companies, pitching ideas, or discussing moves by the best investors in the world, we're trying to get one step closer to punching an investment off of our cards. Let's get started.
Let me just find all the buttons to kill the music. I'm so bad at this. It happens every time. Welcome back to Punch Card Investing, everyone. We've got a pretty big episode this week. Couple of cool topics to go through. I'm going to talk through the Warren Buffett, I guess it's technically the 2022 Berkshire Hathaway letter to shareholders, and then we'll also go through Alibaba earnings. A few people seem to think there's not too much to come out of that. I've got a few thoughts on it. I know some of the crew here have a few thoughts and kind of takeaways from that earnings call as well. And as usual, if you got questions throughout for us on either of those topics or anything else that's on your mind, please pop it in the chat. But Brad, I might throw it over to you to kick us off with the Berkshire letter for this one.
Yeah, no problem. Coming off a cold, so my voice might not be fully there, but I'll do my best. You want to pull that up so we can
Sure.
take a look? And you guys in the chat, give us your biggest takeaways from the Berkshire letter, along with any questions that you have about it. And we'll try to tackle those as we go along.
Sorry, Brad, wrong screen.
That's all right.
While you're pulling it up, I did find it interesting that, at least on Twitter, there was a lot of sentiment around the letter being disappointing and not much in there, but I really didn't find that to be the case. I'm curious what you guys think on that.
Yeah, I don't know if there was a lot of new stuff, but I think that's sort of the point after this.
Yeah, I agree.
Long, Yeah.
I think people are expecting some kind of new revelation, some new breakdown of a stock like he would have got back in the early Berkshire days or even partnership days. But yeah, it is repetitive from some of the things he said in the past, but I think they're important lessons and he always breaks it down well.
Yeah, I think it's probably become more of a beginner investor audience over time as well, whereas maybe that wasn't quite the case in the 70s and 80s. I'm not sure. So, Brad, we're stealing your thunder here. Go for it.
Hey, no problem. So look at that. How many years is this now? 65, 35, 57 years. So almost 20% CAGR for Berkshire Hathaway, exactly double the S&P over that time. So, the incredible returns just keep coming. Although clearly much better in the early days than over the last decade or two. But I think, what did I see? Chris Bloomstrand put out his estimate of intrinsic value, and there's like 35% upside based on what Bloomstrand calculated. So could be some interesting years ahead for Berkshire.
Yeah. I appreciate those Bloomstrand updates because he kind of tracks his intrinsic value estimates over time. I feel like he's always somewhere slightly above market value, but the main thing is it seems to be trucking upwards year after year consistently.
Right. Yeah. Okay, let's get into the meat of the letter here. Okay.
Where do you want to go to, Brad?
Yeah, I mean, the first part, the thing that jumped out at me was this fiduciary gene that Buffett has that, people have talked about before. He really has his partners in mind when he's making decisions. And so that's something you don't see very often. Maybe you can make that a little bit bigger, Tom, kind of fill up the screen width-wise. Yeah. The third and fourth paragraph stuck out to me. This once a saver, always a saver concept. was a little, I hadn't really thought about that, but that does seem to be the type of people who invest in Berkshire. They're not trying to get rich, certainly not quick, just so they can kind of live a more lavish lifestyle. They tend to be really big givers as that capital accumulates. So that was a good reminder. That's not about getting to the promised land and then doing nothing and just kind of drowning in your wealth. It's this process of building and giving back, and this cycle. I appreciated that he pointed to that. Let's keep on going here. Okay, yeah, keep going. And if you guys want to jump in at any point, if you see something that you want to speak on.
Could we just tackle this question quickly, maybe?
Yeah.
I think it's a good point, or at least interesting to think about anyway. Matthias says, would any of you just prefer able to write the annual letter from this point so we can get some insight into the performance of all entities, or as an additional letter to Buffett? I do like the idea of that as an additional letter to get some kind of update on the actual operations of individual businesses within Berkshire. I'm not sure how much of that is throughout the letter from memory, but I know in the past there has been some of that breakdown from Buffett. But yeah, I think it would be good to get Abel's insight as well.
Yeah, well, last year there actually was a Greg Abel letter that Buffett pointed people towards, which was in the 10K, I think. I did have a look for it this year, but it seems to have just disappeared. So I don't know if that was a one-off. I guess it'll come back when Greg's CEO has the full letter. But yeah, that was cool to see.
It'll be interesting what those letters look like, I guess, once Buffett and Charlie aren't there.
So this paragraph was one of the gems to me, and it surprised me a little bit. Over the years, I have made many mistakes. Consequently, our extensive collection of businesses currently consists of a few enterprises that have truly extraordinary economics, many that enjoy very good economic characteristics, and a large group that are marginal. Did this confuse you guys at all, the large group that are marginal? I'm wondering why those would even still be in the portfolio if they're marginal.
I think it's probably a reference more to the wholly owned businesses, because Buffett never sells anything. Like, right. He'll be pretty good at squeezing as much capital out of the thing as he can if it's turns out to be more of a lousy business than he maybe first thought. But I think that's probably what he's getting at rather than the stock portfolio.
I see. That makes sense. Okay, I want you to go down.
Secret sauce.
Yeah, the secret sauce. This was the part that most people pointed to.
The part all the dividend investors really enjoyed, I would say.
It was an orgasmic experience.
Actually, go up a little bit. I think it's the paragraph before this. Yeah. So this is the part I've seen most highlighted from people. In 58 years of Berkshire management, most of my capital allocation decisions have been no better than so-so. In some cases, even bad, have been rescued by luck. Our satisfactory results, I love that he says satisfactory, right?
Yeah, Fintuit can take a page from this for humility, just saying.
Yeah.
The product of about a dozen truly good decisions. One about every 5 years, okay? And I don't remember who it was, but somebody commented on that before. It was our friend from Turkey. It's just one every 5 years, guys. That's kind of a mind expander for me. That we really don't need to find these things very often to do incredibly well over a lifetime of investing. And a sometimes forgotten advantage that favors long-term investors. And I think that references kind of holding on to the winners, right? Not cutting the flowers to water the weeds. And then we get into the secret sauce. He highlights a couple investments. Coca-Cola, total cost $1.3 billion. Cash dividend last year $704 million. Okay, so more than half on an annual basis of the total cash outlay that was invested in Coke. And then, of course, the current value of Coke, I think, is like, what, 25 billion now, at year end.
Yeah.
So talks about Coke and American Express, kind of highlighting those two bets. You guys want to say anything about those?
Were you going to go there, Frank?
I was going to go back to slightly on those kind of 12 decisions that really made the success of Berkshire. I'm curious, I guess the most recent one I would think of, I assume, would be Apple. I guess there's Coca-Cola and American Express there that he's kind of brought up that probably fit in that category, but are there any other standouts, Geico, of course, that you can think of to put in those maybe 12 great decisions?
Well, he mentions... Oh, sorry, Karan. Okay.
Oh, yeah, the Goldman deal that he had in 2009 also. Bank of America, those would count.
Yeah, I think National Indemnity gets a shout out as their first casualty insurer. Seas Candy, I suppose. Berkshire Hathaway Energy is massive for them. The railroad's massive for them.
Berkshire itself to start it all off, I guess.
Yeah, although he'd call that a mistake.
I was going to say that went sideways for a little bit and it turned into a great thing.
Yeah. Yeah, I don't think it would have mattered that much what the original business was, to be fair. Yeah.
I don't know that they could have done a lot worse than Berkshire.
Yeah.
The original investment. But Pabrai actually put out a tweet about this on Saturday. And he came up with 10 of the 12, and he was kind of soliciting ideas for the other two. But hiring Ajit Jain, not an investment in a business, but that was number one. I think Buffett and Munger would both say that was perhaps the most valuable investment that Berkshire made.
Interesting. Yeah, because I mean, reading through some of the older letters, when I first went through those, I was actually quite surprised to see how poorly the insurance businesses were performing. Like I sort of thought the story would basically be he started buying up these insurance businesses and they generated a bunch of float and it was modestly profitable alongside that from day one. But there were some pretty ugly years there for quite a long time. And Ajit and some other people as well came in and helped turn that thing around. Where to next, Brad?
Let's see. Keep going.
This may be an interesting one to touch on just if people are actually analyzing Berkshire. I know this increasingly catches people out. Like I've tweeted at least a couple of times, I think, if you ever see someone talking about a PE ratio on Berkshire Hathaway, just stop, just continue scrolling and read something else. Because the value of the stock portfolio now flows through to their income statements and earnings. So interesting to see Buffett highlight that. He kind of keeps hammering this one home every year, I think.
Even last year's letter, he had the earnings that we don't see, the retained earnings by Apple and so on and so forth. He had mentioned that in the last letter. So
yeah, it was just amazing to me to see, how much in a company like Berkshire, the GAAP earnings can fluctuate based on, the prices fluctuating in the public equity portfolio.
Yeah, for sure.
It's crazy. What else? I'm looking more for lessons here than.
Did you guys catch that even Bloomstrand was buying Allegheny at the same time Buffett was buying?
Yep.
Yes, I did.
It's like they've kind of started. I mean,
mind meld.
Yeah, a little bit. More like you study so much, you kind of almost become like or replicate.
Yeah, I remember Bloomstrand on a podcast being kind of annoyed about the whole thing. Like he was sort of happy that it was ending up in Berkshire, but he was quite pissed off about having to pay the taxes on a gain. He was sort of like, why can't this be that one time that Buffett issues some Berkshire stock and we get paid in that or something?
Right.
Yeah,
it didn't help his performance.
Yeah, for sure.
Okay, keep going.
I guess the buyback section there's just another little interesting thing. 1.2% of the company was bought back that year. I actually thought it would have been a little bit higher, but regardless, it still is a reasonable buyback at what I'm guessing has been trading below intrinsic value. At least if Buffett's willing to buy back shares, that's usually what we'd expect.
Yeah, this line here always irks me a little. I don't know about you guys.
Me too.
Yeah. What's the hot take on that, Brad?
I don't know. It just doesn't seem quite right to me.
No.
Because it's cash, right?
Exactly. Yeah, like Buffett's not outlaying any of his own cash, but he has an ownership interest in the cash that's been outlaid to do the repurchase, within Apple and so on. So,
right.
Yeah.
I guess he's implying by saying without any cost to them that those were also trading below intrinsic value when those purchases were made. I don't know.
Yeah, that makes sense, I guess.
Yeah.
Tom, do you interpret it in a different way, or?
Do I interpret it in a different way?
Yeah.
No, I see what he's saying. I just don't quite agree with the idea that it doesn't have any cost. It is at the expense of Apple, for example, making an acquisition or paying a larger dividend or something like that. That's all I'm trying to say, really. Okay. There's some cost to him.
I think there's better
under
use
the hood.
as opposed to buybacks for Apple or Amex.
No, I'm like buybacks could definitely be the best use. I don't know. I'm just saying there is a opportunity cost. It's not
right.
It's not just magic new money,
It's certainly implying that there's no other higher return on capital for that cash to go towards, which I don't know if that's true, not knowing those businesses well enough, but yeah.
Well, and the opportunity cost could be that something comes along a month, 2-3 months from now, right? And the cash isn't there to fully take advantage of that. So.
Yeah. I mean, I think with the likes of an Apple or American Express, it's pretty straightforward use of capital that keeps things simple, probably from Buffett's perspective, versus going out and making some crazy huge acquisition or something. But it does have a cost. Yeah.
Let the record show. Okay, go down a little bit more. This part.
Sure.
When you are told that all repurchases are harmful to shareholders or to the country, you are listening to either an economic illiterate or a silver-tongued demagogue, or perhaps.
I wonder who he's referencing here.
Yeah.
Maybe the American
buybacks
audience
get it very bad.
Huh?
Sorry, what was that, Tom?
No, I forgot what I said, honestly. Yeah, that's there's usually one sort of like little dig in these letters, I find. It's not super common, but there's usually one in there each year.
There was some politician or someone who was, not recently, but a few months back or years ago, was talking about buybacks being a waste and so on and so forth. I think that's what he's taking a shot at. I can't remember the person's name, but
I thought Biden had mentioned something about that even, but I don't know for sure.
Yeah. It's turned into like a much larger drama than it probably warrants, I guess, is what Buffett's saying, like the idea of taxing buybacks and that type of thing.
Yeah. Okay.
Anyhow,
moving on.
What else?
Oh, this was kind of interesting to me. These pages are not required reading. There are many. Oh, you lost me. There are many Berkshire centimillionaires. I'd never used that word before. And billionaires who have never studied our financial figures. They simply know that Charlie and I continue to have very significant investments in Berkshire, and they trust us to treat their money as we do our own. So it's kind of interesting that he highlighted, there's investors in Berkshire who, they're not really interested in the operating figures for Berkshire. It's like they just trust Warren and Charlie, and that's enough. I don't know if you guys have a take on that.
Yeah, doesn't surprise me a bit, to be honest.
Mm-hmm.
I think there's a lot of people in that camp, probably.
Yeah.
It really ties back into the first bit of the letter where he talks about trust and what is it, the moral, like we have to keep the integrity and everything, like the same thing you mentioned in the first bit. So
yeah. Oh, this is another part where he got a little bit annoyed, right? That activity is disgusting. Go up a little bit.
Bold accounting. Yeah,
bold accounting, creative accounting, manipulating the numbers. So yeah, he got a little fired up about that part too. It was interesting.
Yeah. I found this sort of overview of their ownership of American businesses quite interesting. Yeah, sort of talking through the S&P 500 in aggregate in 2021 earned 1.8 trillion. And what is it? 128 of the 500, including Berkshire itself, earned $3 billion or more, and D23 lost money. And Berkshire owns a whole bunch of 8 of them. So they're the largest shareholder in that list of companies right there. And they also mentioned that Burlington Northern Santa Fe, the railroad, and the Berkshire Hathaway energy business would be 2 more if they were public companies outside of Berkshire. So that's pretty crazy. I don't know about you guys, but I can't say that about my portfolio. I'm the biggest shareholder in anything, let alone 10 massive US companies.
You'll get there, Tom. Yeah.
Yeah, we can dream. Right. Anything else in the letter you guys want to touch on?
Doesn't this also kind of remind you of that exercise that I think it was either Ted or Todd, one of them had mentioned that they kind of go through the list of the largest companies and they have like certain metrics. I don't know who it was. Does anyone remember this? And that's how they kind of came across Apple also.
Yeah, I remember it. I don't remember the details of it.
Yeah, it was
reminded me
Holmes.
Yeah, right.
Yeah, I believe it was less than 15 times earnings over the past 12 months. And then there was some, they're going to earn more in X number of years with a quite high confidence interval, and they're going to compound at a certain rate. But I forget the exact numbers.
Yeah, if anybody knows, put it in the chat.
Yeah.
Okay, let's keep going. I think we're getting close to the end here.
Getting towards the end. It turns out if there were 1,000 Berkshires, no one else would have to pay tax in the States.
Yeah.
That's kind of a cool number.
That sounds good.
Last 10 years of tax payments in fresh $100 bills stacks 21 miles high, about 3 times the flight at which commercial airplanes usually cruise.
Yeah,
that's really a lot of tax.
He's really trying to pound home the point that they pay a lot in taxes.
Yes. What else we got here? A bit of a tribute to Charlie. Found that interesting.
Yeah, that was cool.
I think that was the best part about the letter.
Hey, what was this podcast that Charlie did? I don't think I've ever seen Charlie on a podcast or heard of it.
It's got to be just the DJ Co-Media.
That's what I'm thinking.
Yeah.
Tom, did you have Charlie on? Just
right.
Yeah. Turns out that fake news apparently. So, what favorite Munger quote out of this list, or are they all equally good? What do you guys want?
Well, I like the second one. I mean, I'm in the middle of kind of going through these psychological misjudgments, so that really rings true.
Very nice.
The last one there, if you don't care whether you're rational or not, you won't work on it. Then you will stay irrational and get lousy results. It's not a sexy thing to work on, right? It's kind of a slow slog that Charlie, really put a lot of effort into and I think Pabrai said it was like 50 years of experience before Munger could give that talk, The Psychology of Human Misjudgment. So he's put in the time, and he's put it all in this book for us. So it's well worthwhile to spend some time with poor Charlie's Almanac.
For sure.
Absolutely.
I was surprised to see that patience can be learned, actually. Did that surprise you guys at all?
A little bit. Yeah. It feels like there's some natural temperament in that, but I suppose you can get better.
Yeah.
I don't know if you'd get the world's most impatient person to Munger level or something, but I'm sure you can get better. Yeah.
Yeah. Oh, I liked "Don't bail away in a sinking boat if you could swim to one that is seaworthy." Reminds me of the founding of Berkshire, right?
I think
100%,
Buffett's also said the same thing, but just worded differently. It's better train the vessel or something like that.
Right.
The point
Didn't
about
Buffett and
leverage,
Munger-
yeah. Sorry, no. What?
Sorry, I'll let you carry on here. I was just going to say, didn't Buffett and Munger sink a boat once? I feel like I read that in a book. If anyone knows the details on that, let me know. I feel like they were at Charlie's Lake House or something. I'm pretty sure it's in Damn Right by Janet Lowe, but I might have to remind myself. Anyhow,
That'd be fun to hear that story.
Yeah, sorry, Karan.
But doesn't Munger have a boat that doesn't sink, the catamaran or something? Or he's designed it in a way so that it's unsinkable. I mean, I didn't know.
Yeah.
But
I don't know. That's been said about boats before.
no, I mean, well,
yeah. I don't know. He definitely has a big catamaran that I think people can hire out if they want to. Yeah. But I feel like he's got a few lake boats that he likes to go fishing on, that type of thing. Yeah.
So this one makes me think, the one where your pointer is makes me think this isn't from the Daily Journal meeting where he talks about leverage, because he was almost like touting leverage a little bit as like, hey, if you find a sure thing, right? If you find a cinch, it can make sense to put 100%, 150, even 200% of your net worth in that idea. So this is usually, I think, what he says about leverage, but that wasn't as much his tune in the Daily Journal meeting.
Yeah.
So this is Munger through the lens of Warren, right? So I mean, it's a little distorted, I would say.
For sure. For sure.
Well, at the Daily Journal meeting, he said something like, "That's a very good rule of thumb, but occasionally it should be broken," or something to that effect.
Yeah. Maybe Buffett felt the need to kind of drive the point home on that.
Maybe. This is always one I've really been trying to find the right situation in real life to use, but I've never quite got there. I don't know about you guys. But.
Karan used that not too long ago. I appreciated that.
Did he? Very good.
I just literally quoted Munger. I'm like, this is what Munger said. It was about Berkshire Hathaway Energy or something.
Right.
Yeah.
Right.
Very cool.
It was a while back.
Yeah. Cool. And that's pretty much takes us to the end of the letter, besides like a whole bunch of Seas Candy being sold at the meeting, of which I think I contributed $10 or something. So
nice.
Warren can thank me for that.
And I like that it pointed out, the products haven't been materially altered in 101 years, right? So, you don't need some whiz bang tech thing to do great in investing. I think that was a powerful point.
Yeah, and that's probably the main reason why Buffett steered clear of most technology companies for a long time, I would suggest.
I feel like he took a knock at the entire automobile space with that Henry Ford's Model T, because he could mention anything else, but I think this was kind of like just a mention about, like, say, the car companies and all the electric EV space and everything. Just that's what I picked up from that, but maybe I'm picking up way too much.
Is this a dig at Elon? Is he digging Elon right here?
Seems like it, like, because Elon had said he's gonna like take over some chocolate company, and then you guys remember that whole thing, right?
Right.
I mean,
yeah.
So I feel like this was a very like layered dig, but
yeah. Anyhow, good comment from Louise here. I think for Buffett, a podcast is just an interview done over the internet. That's what I thought as well. I was also thinking when he said recent podcast, it could be any time in the last like 3 to 5 years. So I'm not sure exactly what this is referencing.
Yeah, it's a different lens,
anyhow.
perhaps.
Most definitely. Right. Final thoughts on the Buffett letter. We got any
I'm just
questions
curious to
on-
go back a little bit. Yeah, this is coming from a question as well. Well, 2 comments I'll pull up here. Caleb said Berkshire's first purchase of Coca-Cola in 1988 made 12% a year, or has been a 50 bagger for them, which is interesting. But I guess the vast majority of that value of that investment came in over 6 or 7 years, I think, finishing in 1994. And then Matthias said he should have sold Coke in 99. I think the vast majority of returns came in those, well, leading up to 99. Curious what you guys think about that, or if you know more about the exact numbers of what the last 20 years look like compared to kind of the first 10 or so that he was in that.
Yeah.
Don't know the exact numbers, but that's about right.
Obviously, it's easy to say in hindsight he should have sold at 99. I wonder if there was anything.
Well, he
in
said
the
that himself
figures.
as well, I think.
Oh,
I
Buffett
think-
said that?
I think he has a couple of times mentioned that he should have sold it.
Was it just because the PE ratio is nosebleed high?
Yeah.
Not sure, but yeah, maybe.
It was 40 to 50, somewhere like that.
But I wonder if the business had started to deteriorate by that point, or if that happened in the years after.
I know they had some management struggles. That's in the snowball from memory. I think Buffett being on the board of Coke for a long time complicated also. I don't know if that stopped him from being able to sell out as quickly as he might have been otherwise. And then there's just the fact that he owns, high single digits, I think, of the overall company. So it's a lot of volume to try and clear.
Yeah.
Isn't it 10%?
It's in that. Yeah, it's in that ballpark. I don't know exactly. Gone. I don't know if Coke's done a lot of buybacks, but presumably it's gone up a bit with some repurchasing over time. But yeah, definitely most of the return came in the first 10 years or so.
Someone just commented, Hooded Prum said Coke has paid out a lot of dividends since then, but I don't think that's really the issue. I guess it's an opportunity cost that money could have gone towards something that yielded a lot higher than whatever those dividends were over the last 20 years or so, I guess.
Yeah, say 2 or 3%.
Yeah, it's probably worth noting. I don't know when the exact deal was. I'm actually blanking on the company name now, but Buffett did do a big insurance company purchase, I think, in the late 90s, issuing stock, and he issued stock at 2.5, 3 times book or something, which is, and it's kind of a way of getting some value out of having this really overvalued stock portfolio, even though it wasn't just selling stocks for cash. So I think he was pretty well aware of it. But like listening to some of those late 90s, early 2000s meetings, even, he was talking about, if you've got a really great business, buybacks can make sense at almost any price, I think is something he said at one point. And he definitely hasn't said that recently. So
it looks like Coke has bought back about 12% of their shares over the last 20 years. So, nothing crazy.
Yeah. There you go. Cool. Any last thoughts on the Berkshire letter, or should we move to Alibaba?
Do we want to pull out a few more questions? I wasn't tracking them. There's a lot that came in.
Sure.
Let me just take a couple more before we move on.
Where do you want to go to then?
Just looking through. I'm not sure if there's anything. Oh, quote from Charlie. Favorite quote from Charlie. Even if you win the rat race, you're still a rat.
I was just about to click on that. That's great.
Nice. Very good.
Yeah, I think we're good.
Okay, cool.
Takeaways
Keep the
that you
questions
guys like
coming.
from the letter. Anything? Any point that really stood out to anyone? Or?
I think that sort of a few good ideas was probably the main takeaway for me.
Yeah, I agree. I think it's a good reminder to know that over 50 years, if 12 or 58 years, whatever it is, 12 ideas is all you really need, one every 5 years. It's a powerful thing to kind of remember. I think sometimes...
a decade, that's all we need.
Yeah, I think even over the last year or so, I've been thinking, gee, I haven't come across a great idea, but in the grand scheme of things, that doesn't really matter, I guess.
Yeah, and I wonder how many of those at the time Buffett was like, oh, I know this is a great idea, versus, it played out as a great idea.
Well, he did mention, I'm blanking on the two companies now. I think he brought up two that were obviously a mistake. I don't remember. I think that was in the letter at least anyway. But yeah, there's definitely a handful in there that were big mistakes or lackluster, to say the least.
The jewelry businesses were all a mistake, I think. All the retail jewelry investments were a mistake. Dexter shoes.
Yeah, I think precision cast parts in more recent times has been a lackluster one. That's one of the biggest acquisitions they've ever done, and we almost never hear about it.
Oh, the ones he mentioned were US Air and Salomon.
Yeah. Yeah, it's interesting. It's sort of like a good idea every 5 years, but no major damage in between, like the odd mistake, but nothing catastrophic.
With the airlines, I mean, Buffett has not the best track record. I mean, most people know that already. So,
yeah, I don't think anybody has a good track record on them. That's sort of the point. Maybe there's someone out there.
Southwest just has cracked it, but
yeah,
and Ryanair to some extent, but I mean, basically low cost providers. Yeah.
Well, I like that he had set that as a rule for himself. I think he said he had a phone where if he ever thought about buying an airline, he could pick up the phone and someone could talk him out of it. And then he bought back into the airlines, and it hurt him again. It's like, follow your rules.
Yeah,
we're all fallible.
That was an interesting one because, like, a lot of Buffett followers were obviously very familiar with him saying that, and they were getting into the airlines maybe a year or two before Buffett did. Like, Pabrai bought Southwest, I'm pretty sure, before before Buffett got into the airlines. I know Bill Miller was in the airlines, and I think even asked a question potentially at the Berkshire meeting about like industry consolidation and, have the economics now changed in airlines to where they're good now. I guess Buffett agreed with that a couple of years later, but didn't.
It was very attractive in 2019. Like, you've got like the top 5 that were controlling like 80% of the market. So there was definitely, consolidation could have worked out, but no one foresaw what would happen in 2020. So
yeah, exactly. Yeah. Cool. All right, Alibaba.
Yeah.
That's all right. Let's do it. We
were
just
find that presentation.
You can't find it. Yeah, I was just going to say, for people watching, Alibaba did an earnings call. Had the usual PowerPoint slide deck with all the numbers and stuff. They've since uploaded a transcript to their investor relations page, but when I now go to look at the presentation, which I was literally looking at this morning with the slide deck, it goes to like a Mandarin version of the earnings call transcript. So someone's screwed something up there at Alibaba Investor Relations Department, but I'm going to try and share my screen of the actual webcast itself and just click through the slides. I won't be able to zoom in and out, but hopefully it'll be good enough.
Or
so
someone
you don't
can
speak
find
Mandarin?
it.
So nobody here speaks Mandarin?
I think Jack did, but like he couldn't make it today. So
right.
Yeah, exactly.
Yeah, Jack speaks fluent Mandarin, if anyone didn't know.
Cool. Hopefully is that coming through okay?
Yeah.
Yep.
Nice. Cool. We might be away. Okay, right. So anyone have any initial thoughts maybe they want to share on this? It was kind of a continued theme from last quarter of largely flat revenue year over year, although the third quarter for Alibaba is always a pretty big one. So a little bit of revenue growth, up 2% year over year. Probably the real profitability number to look at there would be the non-GAAP measures. That income from operations up almost 400% has a big like goodwill impairment in it, so largely ignore that. But revenue up slightly, Yeah, same as last quarter, stripping out a lot of costs from largely their unprofitable businesses, and depending on the metric you choose, mid-teens gains in profitability. So, any initial thoughts?
Pretty much same as last quarter.
My first thought, and I guess we can touch on it a little bit when we get to it, but the cloud was disappointing. I think it was somewhat expected that it was going to be kind of this low or slowdown of growth for a while now. I was hoping to see some improvement as China's kind of been reopening, which I think some of these results we're seeing is, I guess, only partially reflected on the reopening. I think maybe about halfway through the quarter or so is when they come out of lockdown. So next quarter, I guess I'm speculating here, but should be better than this quarter if they have benefited from that kind of reopening. But yeah, the cloud was definitely a disappointment. So I guess for the thesis that at least I had going into Alibaba, for that to play out, cloud growth really needs to speed back up. Otherwise, I'd be left less comfortable in my holding, at least anyway, as that was a lot of the bonus upside in the thesis. And then I guess the reopening, to see how that plays out, will matter a lot as well, because the commerce business has slowed down a lot. Rightfully so, I guess, but tracking that will be important.
Yeah,
cloud business, it's surprising to see that ByteDance is still having an impact. I mean,
yeah,
it's been a few quarters since they've left, but they still mentioned one of our top customers has left, so that's impacting cloud. Surprising.
Yeah,
So
I was
think that was
surprised to
3
see
quarters
that
ago, right?
At
Yeah.
least, got to be. Yeah, it's probably good news, if anything, about how sticky some of these cloud services are, that you can't just flick a switch and move over to AWS. Or I think ByteDance has gone to like some Oracle cloud services
Right.
from memory. Yeah.
But their international expansion in the cloud, like I think they had mentioned that they're opening up centers in Saudi Arabia, in Korea, Japan, and I think it was Thailand. I mean, that could definitely drive growth over the next, say, 2-3 quarters. Like, we'll see, hopefully, improvement in cloud over there. So
Yeah, it's
Yeah,
probably
I mean,
written there. Sorry, you go, Tom.
I was just going to say, it was mentioned on the conference call, and I think we know this for most like software businesses already, but I think Daniel Zhang, the CEO, said something like cloud is about scale economics. If you have no scale, you have no economics, or something to that effect. So yeah, hopefully a bit of growth will there'll be some sort of operating leverage in there, which I guess we're starting to see. They're kind of just at break even sort of margins now in cloud.
Yeah, and I was just going to say about the international commerce, grew 18% year over year and makes up around 8% of total revenue. It'll be interesting how that kind of segment of the business plays out if it continues to grow at those type of rates, or at least significantly higher than the China commerce business. That could become very meaningful, just like cloud, I guess.
I think international is going to take a hit next quarter, definitely, because of the whole Turkey earthquake that had happened. I mean, Turkey is what I think drove a lot of the international commerce, at least for this quarter. So next quarter, we're going to see a dip there for sure.
Yeah, definitely. I think Trendyol is mostly Turkish from memory, which was up a lot in sales, I think. The other thing I was just going to say on...
Sorry, Tom, I keep cutting you out. I would be curious to know exactly geographically how that international commerce is kind of split out. I don't know if I've seen that in the
Trendyol,
past.
right? That's the
Pardon?
two main. It's Lazada and Trendyol. Those are the two main sort of.
And
things we
Lazada's
do.
mostly Southeast Asia. But yeah, I kind of mean which country specifically in a relation to broken down by revenue.
Yeah.
I'm sure that information's out there, but...
Yeah, probably. There's a lot of moving parts with Alibaba. It's fairly complex. But I was just going to say on the whole, like China reopening, on the conference call, they did say around the Lantern Festival things return to normal, which I think is very early February. So we might still get a quarter of, I don't know, subpar kind of China commerce sales. But
I feel like they're
in the right
under-promising and hopefully they'll over-deliver. Like, that's what I'm hoping for.
Yeah, we'll see. We'll see. Right.
One thing about China commerce that I found interesting was that whole comment in the earnings call where they're like, yeah, we have deep pockets and, we've got like 55 billion in cash. I'm like, okay, that's a flex, where they're just like, yeah, if someone wants to start with the subsidizing, like, we're ready to go all out on that. So I found that interesting.
Yeah, that was basically a response to a question on competition, right? Like new players coming in, super low prices, basically just burning cash to try and gain some market share. And I think it was the CFO at Alibaba said something like, just about every day there's someone with a new bright idea who wants to try and compete in price subsidies. And then he said something like, if you take a clear-eyed view back through history, it's basically never worked in any single example through history to subsidize prices for a long time. So he sort of said, good luck, and we've got deep pockets if you really want to go hard on that. But yeah, interesting to see. Should we jump through to I think there's a slide on the cash flow situation in here, which I found interesting. Actually, this one was kind of interesting, just on their kind of cost-cutting initiatives. Cost as a percentage of revenue flat to down in all major segments. It kind of concerned me on the earnings call when they were talking about trying to, when they were sort of trying to talk about revitalizing some of their retail businesses, I guess, and they brought up like marketing, and at the end of the day, price is a very important factor. And it kind of concerned me that they were going to do a whole bunch of price cutting themselves after that comment. But to see cost of revenue flat at 60%, I guess, is a promising sign that they're not doing anything too crazy there. Just going to jump to cash flow and balance sheet because I think there's some fairly substantial highlights in here. Karen, have you had a chance to look through some of this data?
I thought we'd go into the buybacks also. I mean, do you want to get into this before or?
Yeah, sure. Well, I guess just quickly on cash flow, like as expected with flat revenue and lower costs, operating cash flow is greater. Their CapEx was also like way down even. So free cash flow was up even more than the operating cash flow. And I quite like how simplified the capital allocation is starting to get at Alibaba. It's almost all just going towards share repurchases at this point. $3.5 billion this quarter towards share repurchases. CapEx way down, and they actually had a cash inflow from their M&A activity, which to me suggests they've sold a couple of things maybe, rather than acquiring a new subsidiary every day.
As far as I know, they sold off that Paytm stake that they had in India. That's one of the M&A deals that has kind of been the reason for this cash inflow.
Yep. And did you want to touch on the buybacks?
I don't know. What did you guys think of the buybacks? It seemed quite low to me, but I mean, I can also see why they're holding on to cash. So did you think it was okay? Like 3.5 billion on almost, what is it, like 11.12, almost 12 billion in cash flow. So how do you guys see that? Is that low number, or especially considering that the share price was in the $70-$80 range? So
yeah, I'm just trying to bring some of that up because I did the maths on this for a video yesterday. Yeah, so they repurchased 45.4 million ADSs for 3.3 billion. By my maths, $73 per share is the average price paid on the buybacks that quarter. They're also issuing shares all the time on stock-based compensation, but net of that, shares were down about 1.4% just in the single quarter is what I calculated. So that seems pretty reasonable to me, to be honest. That gets to some large numbers if you annualize it.
The buyback program is that till 2025, is it?
March 2025. Yeah, so they've still got
22 billion or so.
21.3 billion US remaining on that program.
Yeah, actually, Matthias pointed out something I was thinking about in this moment as well. I wonder, if they have to navigate with the CCP around how much they're putting into buybacks.
Well, now the CCP are shareholders. They hold the golden shares, right? So
they're happy.
they benefit too.
Their stake is increasing at no cost.
Exactly.
Right, Tom?
Yes. Yeah, sure. Yeah.
The golden shares shine brighter. So
There you go.
Just touching on cash flow again. Free cash flow, I think they generated almost more free cash flow this quarter than the past 2 or 3 quarters combined. Probably could look at it on that screen to know for sure. But it is good to see that those cash flows and at least expenses are being monitored a little bit better now. And I guess if you wanted to annualize that kind of most recent free cash flow number, 11 billion in US, and you annualize that to say 44, they're trading at a pretty, and I guess that's making the assumption they can continue that type of free cash flow generation. That gets you to a pretty low multiple on a free cash flow basis.
Yeah, I don't think you can annualize it at all. I'm just trying to bring the stats up here on Ticker, but that December quarter is always huge for
it's
Alibaba.
because Singles Day.
You've got single stat, yeah.
But I think considering the recovery and how the other 3 quarters should play out relative to the last year or so, I don't think it's a massive jump to make.
But also you're right about that, because we're going to be like, this is it's cash flow, but the China commerce segment is heavily impaired. So as we see that ramp up again, we could, I wouldn't be, the thing that would kind of like be a positive surprise for me next quarter or within the next 2 quarters is seeing like they've increased the buyback to like say 5 billion or 6 billion. Like if that's the level of buybacks they're doing under $100 per share, that's very accretive. So let's see if that happens.
So this is just for reference. This is quarterly free cash flow. So that December quarter always seems to be fairly substantial, but it's getting back up to, I don't know, within range of 2020, which was kind of the biggest quarter they've had. So, right. Let's see if I can get this presentation back. Okay, I think there it is, hopefully. Cool. And after all of that, where is it? 55 billion in net cash at the end of December, so still a lot of money. I think that's getting very close now to about a quarter of the market cap, just for reference. So that's getting up there.
I think if you just look at cash and their investments, that's where it comes to, like around how much is like $45-ish per share, something around there.
Like if you include the Ant stake and that type of thing, or
no, without the Ant stake, like just their investments and cash equivalents.
What's the stock at the moment? Probably mid-low 20s, just cash, just net cash per share.
But it's a damn retailer, so that's why.
Yes, I was actually just gonna bring that up. What do you guys think of Charlie Munger's comments there? So for anyone that hasn't seen it, maybe that's watching, it was essentially he got charmed by the position in the Chinese internet sector, but at the end of the day, they're still a goddamn retailer. That was basically it, right? One of the biggest mistakes he's ever made, I think he said.
Mm-hmm.
I wonder what Costco does. Like, just.
I think he just realized he overpaid.
Quite possibly.
Well, it'll be interesting to see what happens with those shares because he still holds them as far as we know.
Mm-hmm.
But to call it the biggest mistake he's ever made and do nothing about it would also be strange. So we'll see.
Yeah, it would have been nice to have a little bit more color as to what the mistake was. But
yeah, we'd better let Becky know to ask the follow-up.
That's right.
Yeah. All right.
Less Bitcoin, more Alibaba next year.
Yeah, exactly. Segment results. Should we run through those quickly? Hopefully we can see that okay. I was just redoing the maths on this yesterday. If you want to use adjusted EBITDA as a profitability metric, even though we know what Charlie has to say about that type of thing, China e-commerce business more than 100% of Alibaba's profitability on that measure. Not sure if you guys are familiar with that or not, but they've got a few money-losing businesses in there. I think Briar's talked about maybe a sum of the parts approach to valuing something like this being the way to go. It's probably why he's talking about that. Yeah, any thoughts on the China commerce sector? This is obviously the big one for Alibaba. I think 69 or 70% of revenue in the quarter.
No, I guess, but just touching on your kind of profitability comments, that is kind of, I guess, where the bull case from Alibaba does come from, is that you see this operating leverage as these other business operations start to turn profitable. Going back to maybe that first slide would give us a better idea, but I think China commerce is 70%, or maybe on this slide it'll even tell us about 70% of total revenues.
Yeah, 69%.
Yeah, so as those 30% of other businesses, I guess, start to turn profitable, assuming they're high margin or similar margins to the China commerce, I guess you could hopefully expect that from international, and cloud should ideally have even higher margins. There's some operating leverage that could come to fruition over the next however long you see that happening.
Yeah, for sure. So excuse me, for the quarter, 52 billion RMB adjusted EBITDA at the overall group level, and I think China commerce on its own 58. So yeah, more than 100%. But yeah, it was a similar theme for me across like a lot of the major segments. Flat to, in some cases, modest, and a little bit were good kind of in terms of revenue growth, but improved margins, I think, on every single business. 34% in this case. It's actually rounded. It's 0.8%. So up a little. But here with international commerce, -18 to -4. Local consumer services, -41, which is pretty horrific, to -24. And then we're getting into, so logistics, -1 to 0, modest gain, 1 to 2 in the cloud. And these are pretty tiny segments, but it's -17 to 0, -156 in their kind of other bets segment to -150. So yeah, similar themes there across the board, I would say. Yeah. Any additional thoughts on what we ran through there? Did you want to touch on cloud at all again, Frank? Those are kind of some of the numbers there.
No, I guess I've kind of said most of it there. It's just a bit of a waiting game for me to see how this does play out, because I think the biggest upside to see an outsized return in Alibaba, I think cloud has to become a major part of revenues and a reasonably high margin business. And from what we've seen over the past year or two, there's no real indication that that's going to be the case. But like we said, there's a lot of reasons why that is the case, I guess, with the ByteDance as well as the kind of conditions in China and the reopening and everything else. So it's just a waiting game, but definitely something that should be monitored.
Yeah. And we were chatting briefly before we went live here that the Alibaba CEO is now also the CEO of Alibaba Cloud. So I have really nothing intelligent to say on that other than it'll be interesting to watch. That sounds pretty major to me. I don't know. What do you guys think?
Yeah, I mean, it's clear where the CEO is focused, so where they're going to be expanding. So, but one thing that I noticed in the international segment, I found it interesting, is that although margins are like at -4%, it's a lot better than what I think other companies that they're competing against. Like I think Shopee is one of their competitors, and those are like massive money losers over there. So compared to them, I mean, the international segment is improving, and although it's just I think 8% or so, or of total, it could have a major impact later. So
Yeah.
yeah.
Cool. Anything else you guys want to say at all on Alibaba, or should we take some questions here?
Looking forward to the annual report in the next 3 months or so.
Yeah. I might just share one other highlight quickly from the Q&A section of the conference call. It was sort of, I think the question was around just like a broader recovery and consumption and that type of thing. But they brought up some interesting just stats that I thought would be worth sharing on sort of overall growth in China. Obviously, this is like a little bit crystal ball and looking into the future, but I think it's like interesting stats to kind of talk through. So International Monetary Fund forecasting 5% GDP growth in the next year, I think that is for China. So that's kind of one of the reasons a lot of people were interested in Chinese stocks in the first place, is the economy at least was growing a little faster. We'll have to see moving forward. But within that, the components that make up that GDP are quite interesting if you compare it to a really developed market like the US, for example. So you sort of get 5% GDP growth. We'll have to see what happens. Consumption as a percentage of GDP in China is 38.2%. That compares to 68.5% in the United States. So potentially a lot of room to move on like the composition of GDP as well on that front. And IT spend as a percentage of GDP, 1% in China versus 5% in the US. And within that IT spend, cloud in China accounts for about 15% versus 21% in the US. So I thought those were kind of interesting stats that management brought up just to kind of talk through the larger opportunity as well.
Cool. Any questions that you guys are seeing?
Yeah, I didn't realize when Alibaba IPO'd, it traded at 20 times sales.
Yeah, they did well on that one.
Yeah.
That's one way to raise some money. Yeah. So trading at 20 times sales, now at 1.5 times sales, apparently. Interesting.
There's a multiple contraction for you.
Yeah. Do you guys know where it's at on like a free cash flow basis at the moment? I did calculate that the other day, but I haven't got it handy. I think from memory it's mid-teens after you back out stock-based compensation. Somewhere around there.
Yeah, I'm not sure. I thought maybe a bit lower, but I could be wrong.
Yeah. Again, it's an interesting one. Do you just take the overall group's free cash flow and work from there, or do you try to do a sum of the parts? Because if you did free cash flow just on China e-commerce, you'd get a higher valuation. And then you can start tacking on cloud and the Ant stake and net cash and all that type of stuff. So, don't know.
Yeah, I think some of the parts is the way to look at it, but there is a lot of risk going into any some of the parts valuation, particularly in a market that we're clearly less familiar with. So it's hard to value a business like Ant when you really don't know what's going to happen on a regulatory basis. So you could say it's worth 30, 40, $50 billion, whatever, but we don't know if we're ever going to see that realized. There's a potential upside that's worth even more, a lot more than that. And then I guess it's fairly similar even with some of those, like the cloud and the international commerce as well. It's really unpredictable, but probably the best way to go about it if you can get it right.
Yeah, I mean, the interesting thing is you can just put a zero on a lot of those things and it still looks interesting. Exactly. I think that's what a lot of people in.
You would have to do. I guess that's where your downside protection comes from. Even assuming a slight negative value to some of those businesses, and then arguably it could still be semi-cheap considering just the China commerce business.
Yeah, that's how people like to talk about some of the parts, right? I'm paying X for the e-commerce business and everything else is free. It's all an option.
Yeah. Yeah, or it's too hard, but maybe one of the segments is simple enough to rely on. I don't know.
Right.
Cool. Any questions that you guys want to tackle? We've got a few good bit of back and forth going on the Charlie comments, which is interesting.
I guess just a question I might ask you guys now, kind of, I guess, following somewhat, well, Alibaba and some of Chinese stocks in general over the past maybe 2 years or so. Has your thoughts or outlooks on China changed? Obviously, there's a lot of things that have happened there, but how do you feel about investing in China? We're in a small minority to be even considering that, I guess.
Anyone want to take that?
How about you, Karan?
I think it's gotten better. I think it's gotten a lot more favorable. I know the narrative seems different, but if you look at what they're doing with the Hong Kong exchange, they've done a lot to improve it. Like, I think recently they've given some guidelines for REITs to be listed on the Hong Kong exchange. There's a lot that's being done in terms of regulation to make it a bit more transparent. Even the audit reports, hopefully, we'll get a little more clarity on that soon. So compared to what it was earlier, I think the disclosure is getting better, regulations are getting better. So I see it as a positive.
I'm curious, about the sentiment of investing in China, where you're located, Karan. Can you tell us, give us any flavor of that?
Like what people think around the area, or like
just investing in China, what the risk is. Obviously from the US, there's a particular flavor to it dealing with China. I'm curious what it is where you are.
I mean, yeah, but it impacts everyone, right? I mean, if the Fed changes the rate, it impacts the world. If there's an issue, everyone gets impacted the same way. So, yeah, even the currency here is kind of pegged to the dollar itself. So, it's not like a different currency also. So, that's not a perspective I even think about as such.
Mm-hmm.
So,
yeah, I think in general, like speaking more broadly on the macro of China, I guess there was like a massive bull run in the economy over the past decade or two. And then I think over the past 3 years or so, give or take, we kind of seen a lot harsher regulations, big crackdowns, things going wrong, COVID, all of these things. So there was like a 2 or 3 year massive downtrend on everything kind of China related. And just recently, I think that's starting to swing back upwards. This is, again, very speculative. It is all macro stuff that for the large part I want to ignore, but it does seem like it's recovering. So hopefully we see that reflected in Alibaba numbers moving forward.
Yeah, I find it interesting that because we always get these types of questions. And then when you watch Charlie describe why Alibaba was a mistake, he said absolutely nothing about the politics of investing in China or whatever. It's because he sort of misunderstood and probably paid too much for the business. That's what I think probably you're better to spend your time on. Yeah, there's obviously risks there, but there's risks investing in most countries, I guess. We'll have to see what happens. Any other questions you want to take on Alibaba? Or if people have questions on anything else, feel free to pop them in the chat as well. We'll do our worst to answer them.
if anyone has topic ideas for next week, they can include that in the chat.
That would be great. We always struggle for them.
Well, Tom, you just put out your Seamus Cloner portfolio, right?
I did, yes. You
want to share any highlights from that?
Well, there weren't a lot of highlights, really. It's sort of neck and neck with the S&P 500. It had pulled ahead of the index for the first time last month, and it's back down a little bit again now. But there was really nothing. I'm struggling to get a full 10 by 10 portfolio at the moment. I thought I might finally get there this quarter. I had, I think, 8 positions. If you treat the 2 Brookfield stocks from the spin-off as one, that is. or I might have had 9 actually, and I'm down to 8 now, I think, because I sold Taiwan Semiconductor, cloning the Buffett almost complete sale, and really had nothing to roll it back into. So I got a little bit of short-term treasuries in there at the moment. So that's where things are at for now. But hopefully I'll finally get that full 10x10 allocation, because I've got a 20% allocation at cost to Alibaba as the last remaining 20% position. There are a few of them out of the gate, but that's the last one. Although it's shrunk down to a 10% position, so it doesn't actually stand out that much. But yeah, that's where we're at.
Jason's got a few questions.
Yeah, I was going to say, should we tackle... Oh, wait, that was the wrong one. After your investor's first comment, what would it take to make you sell Alibaba? Is there anything?
Is there any? Well, yes, you'd hope there's something else. We're all behaving very irrationally. I think at the start I said if there's some sort of issue with the VIE structure, which I really don't think there has been yet, but if something cracks there, or if the whole common prosperity thing blows way out of hand and Alibaba are giving away all of their cash flow rather than investors getting anything, those are 2 things high up on my list. And if the business intrinsic value just deteriorates really substantially, then you'd have to get out. This has been an interesting one because the intrinsic value, I think, probably has deteriorated since we got into Alibaba, but the stock price has deteriorated a whole lot more, in my humble opinion. So it's been an interesting one to kind of work through in that sense. But there are a couple on my list. How about you guys? Nothing.
Oh, well, I was just waiting on that one. I'm slowly becoming more conservative the older and older I get. So it becomes increasingly harder to want to hold anything in China, just generally speaking. And I'm not saying that's going to make me pull out anytime soon, but I think as time goes on, if the risk doesn't kind of lower over time, then that would be one reason I would sell anything kind of China related. But that's a time frame thing, I guess. The other thing is the cloud, which I did mention earlier. If that doesn't start to show some good growth and profitability, then a reasonable part of my thesis, at least, is deteriorating. And then the China commerce specifically. So a big part, like Tom mentioned, was the GDP per capita growth, and I guess how much the kind of disposable income of each consumer in China. So if that all slows down, then a lot of the bull case is kind of ruined, at least. So yeah, there's a few things I'm tracking, I guess. And if they all started to fall apart, then there's no point holding on to the stock.
Have you guys watched that? There's a video that I came across recently. It's by this guy, I think his name is Tom Hayes, where he compares Alibaba to Microsoft right after the bubble, right after 2000.
Oh, yeah.
It's like a submerged balloon or something. Yeah, I'll share the link to that later on in the comments or something. But I mean, that's pretty much what it's like. Like, the underlying fundamentals are going to improve. And if we don't see those improve, then it doesn't make sense to hold on to it. But the management themselves are telling us that because the restrictions are going to be reduced, commerce is going to get better. We can see that they're getting into cloud, like they're expanding. It looks like it's going to be positive, all of it. So it's just the last 2 years have been a bit of an anomaly, but now the government has their stake in the business, and clearly they recognize the importance of having these dominant businesses. So I think the future looks good.
Yeah, it's finding that sweet spot, right? It's like you want to give the business time to do its thing. You don't want to wait too long, right, until the price deteriorates. So it's like, it's a tricky one.
Yeah. The other thing I would add is, which is kind of the case for all stocks, but just if something more interesting comes around. For me personally, I really like the setup personally. Obviously, do your own work on it, everyone, but it's probably one of the lower conviction companies in my portfolio at this point. And the opportunity set, I was just looking back at the S&P 500, just as like a broad measure, that was getting very, very close to its is it late 20? Yeah, getting very close to like its 2021 peak around the time we were getting interested in this stuff. So the opportunity set's also quite different. Like there's much more interesting stuff out there now than there was, a year or so ago.
Are we talking companies like Chevron? That was one of the questions that Jason had. Like, Tom, are you taking a look at Chevron? So, what are you looking at? What looks interesting?
Yeah, no. What looks interesting?
Yeah.
Well, I don't want to just rattle off my whole portfolio here, but yeah, I'm just kind of saying there's if you were to compare like Alibaba to a US big tech company, back when Munger was first getting into it, like it looked a lot cheaper, but I think that gap's closed. I think that's all I was trying to say, really. Yeah, haven't bought Chevron as an aside. Yeah. Any other questions you guys want to tackle before we wrap it up?
I think that might be good.
Might be good. I feel like we've got to do one more just to send us out. If you guys have any in there you wanna answer, let me know. Should we change it up completely? I'll throw this one to you, Frank. I have a question on Hingham. Are you concerned if rates stay inverted for a very long time, and how will that affect their business? Any thoughts on that?
Concern? Not really. I think obviously before I started kind of following the stock, the macro situation, I guess, or the interest rate, they change. So it does change the thesis slightly, but the long-term outlook, having a very long-term outlook, I think is important because they've kind of weathered a lot of these storms before. So how long they stay inverted, I guess, would matter, but this is a particularly long-term hold going into this position. So yeah, not really. I'm just really keeping a long-term outlook and trusting management and trusting the history of kind of decisions they've made. So you want to touch on that one as well, I guess, Tom?
Yeah, I pretty much agree with you. Like it's obviously a short-term headwind where you borrow short and lend long if the yield curve's inverted. Like typically if you lend money for a longer period of time, the interest rate you get goes up, but that doesn't seem to be happening at the moment. That doesn't feel like something that is sustainable over a long period of time. That sort of seems like a bit of an economic law that we'll return to at some point. And I know in the latest shareholder letter, or I think it was a shareholder letter from Hingham fairly recently, they sort of talked about having some short-term pain as a result of this, but saying that it would be a big mistake to just completely flip their strategy or something because of something like this. I think the long-term model still makes sense. And I think even given all the things that happened, they still generated like a north of 10% return on equity, which is pretty solid given all the headwinds that have happened and how long it takes them to roll some higher short-term rates into their loan book and that type of thing. So that's sort of where I'm at with it.
Yeah, I think they're kind of facing kind of a difficult macro environment, and they've been relatively fine throughout. So if anything, it just creates an opportunity, I guess, more than anything, particularly if you're a long-term investor.
Yeah, I'm with you. All right, should we wrap it up?
Sure.
Cool. Thanks everyone for watching. Thanks, gents. It's a shame we didn't have Jack here, but I always think 4 faces on the screen looks a little better than 5, so we'll take that as a win. Thanks everyone for watching. If you do have topic ideas, please let us know. That would be much appreciated because we're always going back and forth trying to figure out a topic, sometimes a little more last minute than we probably should. So that would be much appreciated. And thank you everyone very much for watching, and we will see you all next week.
Thanks for tuning in to Punch Card Investing. The contents of this show should not be used as investment advice or as a recommendation to invest in a particular security. Please consult with a licensed investment advisor if you need investment advice. All investments carry risk and the potential for monetary loss. Thank you, and see you next week.